There you are, George.
There
Got
you
you.
go. You guys here? Everything okay?
Yeah, got you, buddy.
All right. I've had an unusual, but I still think well within the parameters of skill last couple months, and I'm basing this on the which considerable length of time our sentence into financial markets that we are in a most unusual phase right now, and that if you're not trying to time the top, I think you're at a point similar to like what we had in 2008, 2000, 1987, have at it, where we're
Yeah.
going to get the shoe reshuffled for the blackjack game.
All right,
And
let me ask you, George, because you're this is more your wheelhouse than mine. I've
mhm,
read articles for the last few months about strange things happening at the in the repo market,
mhm,
and a lot of banks having to go to the discount window. Now I'm seeing, hearing, reading things about sulfur
mhm.
rates being about 4.7. So do we have a leak in the financial system here, or we have a plumbing issue in the
I,
financial system,
we
liquidity
don't have one in
wise?
the United. We don't have one in the United States, and the issue is not going to be a credit crisis or a
What's it going to be? War in Europe?
I don't know. In fact, I'm not certain it's going to be an exogenous event like plague or war or what have
Hmm.
you. But those events are bubbling out there. I think what we have here now is chaos. And in terms of the law code of the United States, is applicable to financial asset valuations. Now, I'm not taking a stand here as left, right, up, down, whatever. I'm just taking a stand in terms of like if you have a gripe and have lost a shitload of money and you want to take it to court and get it resolved, it's questionable whether you have access to the full legal system at this point, given that Trump has gone out and flooded the zone with a deliberate obfuscation, disarray of the judicial system, so as to modify the Constitution to enhance his powers. I don't think this is a debate. I don't see how anyone could say otherwise. And what's this doing is that while he goes through this process, we have what you call wilding of immense size. For example, we just talked about the Oracle AI and NVIDIA daisy chain trade, where they each passed 100 billion to each other, took a tax write off to get it within this tax year. Well, one time availability that Trump gave him, which smacks to me of patronage payment to all the guys who attended the dinner at the White House and also backed them up.
Yeah, I
Um,
I was I was a
yeah,
valet at that event.
it was just it's crass. It's just
Yeah,
crass. And if
yeah.
it's a tax, if they do get to claim this is 100%, there's a full tax write off. That's we're looking at a 30 billion payout from Treasury and to these three companies. And I'm sure Amazon has its own variety and so on and so forth. Uh, what this all means is that yeah, it could be good, it could be bad for the economy, it could up, down, whatever have you. Um, but we won't find that out for about a year or two, and we have a great risk that something breaks. We've already had a extreme civil disturbance event. Maybe it
Mhm.
was a terrible event, but maybe it wasn't worthy of 80,000 folks in Arizona Stadium uh, going on. And some people might say that's scary, and I'm talking about Republicans, not Democrats. Uh, and the chance that something breaks and we need 3 months or 6 months just to find out where the hell we are is very high. And if you add that to the valuations or the lack of valuations, just the extreme relative value of compare S&P to NGDP or pick two pairs. You're in a fog now, such that
What are the usual suspects for something breaking?
what it will probably be is if we're all our experience, and it's usually a mistake. History doesn't repeat itself, but it does rhyme. Is a long-term capital management might come out of the blue. A complete failure of some what is considered now a mainstay, a block of granite in the financial markets. I don't even want to like spread shit, but let's say the Citadel somehow they lose control of the risk and all these short calls to fund puts, it just doesn't work
They're
out.
doing it now. They're loading up, and the VIX keeps grinding a little bit higher, George. Uh, and we had a pretty negative day yesterday, so I'm with you now for at least something, a
Yeah,
correction. I think the highs we had at 67 plus might be it for a while, but the VIX has been giving us a message for about a month now. I mean, we're a little bit lower today, but we're well off August highs.
yeah,
Well
but
off
the
August highs.
thing, Dale, is
Why is the VIX rallying with the market making
well,
new all-time highs? People are
I don't
hedging.
pay much attention to the VIX because I perceive the VIX as really a trade for correlation. It's the pairwise, like the matrix of every stock to every stock weighted in the
Yeah,
S&P 500 in terms of if the correlation goes toward one, which it always does in a crash or a large downtrade, then the VIX goes screaming up. And if the correlation goes back down towards zero, then the VIX drops like a stone. So the VIX is actually going to capture an extreme event on the downside, in which case it's probably going to go to 40, 50, something like that,
yeah. Okay.
as it did in 2000, 2008.
Well, I'm just saying that usually as the
Yeah,
market makes new highs, VIX makes new lows or makes lower lows,
right.
not higher lows
Yes, yes.
like it's doing now. Just
Yeah.
something, it's a tea leaf for me, okay?
Yeah, there's they say in China that or used to be that the peasant's pig would climb on top of the roof of the house before an earthquake. And I think
Wow.
the VIX might actually be that pig right now.
Oh
Uh,
man.
Shit's going to
I've
happen.
never seen a pig climb.
Well, it's a good story anyway, so
Anyway, be a viral YouTube. So
yeah.
let me ask you, if your scenario plays out here, um, what are you looking for in S&Ps? What would be back to like not even fair value, but um, 20, 30%?
Well, I think this is such a binary situation that for all the money that you just got to have that 5 years from now. I think it should be in cash. It shouldn't
Okay.
be in gold, Bitcoin, treasuries, or anything. It just be cash, and you
Why
got to run.
not go? People will send you hate tweets over not holding gold. Both of those,
I don't know
Bitcoin and gold.
anything's
Why
gone up
not
like five. Anything that's gone
go?
up for 5%. I don't know if that's a good store value. It
Okay.
might go up another 500%, but I don't think it's a good store value in terms of.
Cash, and you like the US dollar in a circumstance like this because there'll be dollar shortages in this scenario.
No, the U.S. dollar is it's not really a function of supply demand or people want it or don't want it or liquidity or what have you. The U.S. dollar is either with prescience, like in the days of Schultz and Baker and all those guys, or in terms of reaction, will be just three or four guys in a room say, okay, where do we want the dollar level to best suit the United States? And that's where it'll be. So the dollar will be a political decision. It has, I don't think it has much to do with trading.
Interesting. Okay. And uh, it would be hard to see them want to see an appreciating dollar.
I think what I'm going to do, because I have what I think is sensible greed, is I've set across all the money that I'll just be crucified if I lose a dime of it. It's in cash,
Okay.
um, or T bills or what have you.
Who's
Uh,
persecuting you, George?
Well, I got a risk manager at home that is, can get pretty tough.
All right.
Like, she says, like, what do you mean we can't go out for dinner 3 years from now? God help me otherwise. So the money that I can
Afford
afford
to
to,
lose. Yeah.
yeah, I think should be 100% balls out, the most riskiest expression you can find, with the most convexity. If the trade works out, you get better and better results. Is is should be setting up right now. I've already done a tranche of this. I started this out, I think, the last time we talked a month ago, and it's gone to zilch. But I think this is such an interesting environment and such an unusual opportunity that I've arranged some financing, and I'm going to go back at it. It's just hopefully I can
So
be a little.
what kind of trade do you put on? Just outright puts in the S&P?
Yeah, I'm just going to do a put. Um, I'm tempted to go back into the S&P. The reason for that is that this daisy chain of like almost tax fraud that's going on with Oracle, Nvidia, and AI is quite the flag. But I might just go to the liver of the economy, I call it, and that's J.P. Morgan. If you remember .com, it was J.P. Morgan that went down first. It wasn't the high tech. It wasn't the Global Crossing. Wasn't until a year later or so. But it was J.P. Morgan that started to lose value. About a good 6-9 months before the .com crash, and especially it had a very adverse reaction when long-term capital management went down. So
Yeah.
I think it's going to be either J.P. Morgan or S&P. There's also the other stock I'm looking at is Costco, which if I don't know if you want to put that one up.
There's JP Morgan right there.
Morgan, right?
That's a daily.
And
Diverging up here.
that's of course somewhat of a catch a falling knife. But if you put up Costco, COST.
Okay.
And the U.S. economy is, it's about 70% consumption, and Costco has an incredible 1.5% of share of all the consumption in the United States. And if you put on a longer chart, if you could do that, like even put weekly,
There's weekly.
that looks interesting. But that maybe is too much finesse, and I think perhaps what I want is just blunt force trauma for this short. Now, my flag for this, since I think this is Trump. You got to face it. I'm sorry, that's what's going on. The guy wants to claim the stock market. Let him have it. Is going to be what the Supreme Court decides for all the tariff laws that are coming up. There's all sorts of cases. He hasn't won a single case in the Supreme Court. And the stays that he is getting from the Supreme Court, which is in what's called the shadow docket, which just basically tells the lower courts, okay, you can't do that. You can't do this temporary restraining order. You can't do this, Trump must crawl on his knees and ask forgiveness type ruling. Those aren't victories. Those are just like saying we're just going to wait for the next the final decision, because the Supreme Court has to make it stick. Like they're in a point of writing a law or affirming the Constitution that comes up every 50 years or so. Trump's insisting on it, for good or for bad, and the Supreme Court has to respond. I think it's sort of it's very it's thoughtless to think that the Supreme Court, well, they're all conservatives and they're all going to back Trump. They have no reason to back Trump. They're an institution with long history, great pride, and what they're going to do is rule as per the Constitution of the United States. And since the majority of the Supreme Court guys, actually the vast, if like I'd say 7 out of 9 of them are Federalists, that's both the left and the right.
Yeah.
They're going to honor the Constitution. They've already made some noise of that, and they're going to, I think, they're going to smash Trump up.
It's kind of ironic. It's the same court that removed a lot of the guardrails.
They didn't really remove the guardrails. They just said that we have to because Trump insists, and he is one third. You know, he is the one of three of the all powerful governance in the United States. We got to let him play it out, and as long as he doesn't commit violence or you know do a push or a coup or something like that, then we have to let it percolate. That means it has to start with the lowest federal court, then it goes to the next one, and it goes to appeals court. And then after about a year or so, it ends up with us. And that's what's happening right now.
Okay, so then most of these decisions that would bring the market down aren't due till next year.
Yeah, I think, well, they're not actually, it starts in December. And I think Trump is going to start. Now, this is just a subjective call.
Okay,
I
they
think
all
Trump
are.
signs that he flails. He doesn't have a very strong bench in terms of legal input. This guy, Bear, who is his doing his arguments or his court his cases in front of the court, Supreme Court, is not a dummy, but nobody seems to really have a you know a 50-year long type of idea of where law should go, and he flails. You know, the Truth Social Dutch, and I think he has great ability to scare the shit out of the markets. Just you know, just frighten everybody. And I think that's I think everything I'm doing is foolish unless I think I can get like a 20% hit to the markets. So I'm looking for a
Okay.
10 to 1, you know, 15 to 1, once every 30-year type opportunity here.
Well, that's saying something because you've seen quite a few cycles in your career.
Yeah, I'm
What would you compare this to? And what do you
that's where
think?
it gets
Go
it's
ahead.
really unique. 2008 had just a ton of international flows. It might even be called an exogenous events, i.e., outside the U.S. economy.
Yeah.
China's you know sort of unstable cash positions to support the RMB was just came unglued. I think that was the root cause of the mortgage crisis. And then we had, but so it's not that 2008 is not a good comparison. And then we have 2000, all this like goofing around with .coms and
Yeah.
is very similar to what's going on with AI. And
Okay.
then prior to that, you know, 1987, where I think that was home brewed, where
It was.
Greenspan just got into you know, I got to show people I'm serious, so he really started to ratchet up the Fed funds in the face of the Nifty 50. Uh, I think it's a mistake to look back for a precedent. I think this is Trump. So, you know, God help
Okay.
you. I think you either got to get out of this market, and I mean everything. Commodities, gold, silver, the whole bit. I think the only thing you can depend on is that the US is not going to disappear. Or you got to make a call on Trump.
Where do you
I
keep? Is there any particular strategy you have for holding cash? I mean, do you go into T-bills?
just in
Do you have a safe bank? Do you put it under
no,
your mattress?
I think I think the US in terms of its monetary policy and capabilities, it is risk free, and we're not going to have like a major money market fund break a buck or anything like
Okay,
that.
no bail-ins, no bank failures, no bail-ins.
No bank failures, no Continentals,
Okay,
no that. I think
that's going to be Europe and Asia, right?
I think we might be seeing it already in Argentina.
Okay,
Argentina
yeah,
because of this. I think Europe has a big problem. They're not really a country. They have no central authority. They have no treasury,
yeah.
so they can come unglued.
You know,
Especially,
Martin Armstrong has been talking about, this for a long time that the currency union wasn't going to work. But he says right now the reason gold, the market, and the dollar are all going up at the same time is that it's flight capital out of Europe, that the wealthy are leaving Europe. And that's a completely different story than we heard 6 months ago when the DAX and European markets and emerging markets, which still are to a degree, way outperforming the US. But if you look at S&Ps and then look at um, what's happening in Germany with the DAX. DAX is well off its highs. It's
Mhm.
certainly not leading the U.S. anymore. Um, so anyway, he thinks Europe is ground zero for a lot of things, including
I think
putting boots on the ground in Ukraine.
yeah, Europe was a great one of the three major factors why long-term capital failed. That was all the Swedish, all the Scandi mortgages that long-term capital got into.
Yeah.
The in 2008, 2009, all the German banks basically went down, also with U.S. mortgages. And I think there could be, but I don't see any sort of ability for Europe to corrupt the United States in terms of fundamentals. But I do see the ability for Europe just to scare the hell out of everybody.
Okay. And how much time and how much time do you go out and buy with your puts?
Uh, I was I screwed up, but I guess I'm a better macro guy than a portfolio guy than a trader. My tenor for my options that I started in August, actually started in July, August, and then were too short. They're about a month or so. I thought I was past the Citadel fellows to to take me apart, but the clock ran out. So
Okay,
now
yeah,
I'm thinking that I'll just pay the freight for Theta. Vol is still very cheap, so there's not
it
much of a
is.
vet charge.
Yeah.
And I think I might even go March, maybe even far as June. So instead of like this the greedy 20 times return, I got to settle for only 10. God help me if that's what actually happens. But
Okay.
I don't think this is the time to trade. Let's put yourself in the boots. Let's say you're running the general account for MetLife, um, and the mainstay for your ability to survive problems has always been the correlation between U.S. Treasuries and risky assets, equity for the most part, and that was always negative, such that whenever the equity market took a tumble, your U.S. Treasuries, although not they're only like 20, 30, 40% of the general account, would be enough to survive. Now correlation is not negative, and it's not clear that if the stock market falls apart, that
That bonds will bail you out anymore.
right. And this is a problem for like MetLife, CalPERS, Texas teachers. The vast majority of pension and saving assets in the United States. Maybe I don't know. Maybe that could be a problem. But
Well,
so
certainly if we have a pension problem, the pension guarantee, whatever it is, couldn't cover a drop in the ocean.
yeah, I think it's the idea that pensions are backed up by like FDIC of savings is a myth. Pensions have always been pay as you go.
Yeah.
They're definitely a forward welfare payment in terms of
There are people looking for a crisis in the pension
yeah.
market.
Yeah.
Yeah.
Now, however we cut it, Dale, the U.S. I don't know. It's worth I don't know. It's just it's an abstract 130 trillion.
Yeah.
Um, and so let's say a big problem happens and it's only down to 90 trillion. Well, that's where we were like 20 years ago. So the US is not going to there's going to be a big changing of the guard, who's in charge, who's not, winners, losers. But as far as the backbone to the economy in the country, I don't think that's a risk.
So you're not worried about social unrest either?
Well, the the talk gets a little crazy. But if you look at Trump, his big problem with this campaign he's doing to what's called the unitary executive, which is to completely redefine the balance of power between the judiciary, the
Right.
Congress, executive, is that he doesn't have a coercive force. Like if like either Congress or the judiciary say, "No, you can't do that." He can't come up with like 100,000 men to do something. I think he's rattling the saber, and I really think he is seriously with this occupation of Washington D.C.
Yeah.
and Chicago Chicago. It's got nothing to do with crime. I mean, there's places there that are hellholes. They're going to still be hellholes.
Right.
But he is trying to show that he has a call on the force required to finish the game if one of these parties, Congress or the court, say, no, you can't do it. And I don't think he can. But that sounds like a made for TV lousy documentary or even fictional movie, but I think that's where we are right now. So
Well, yeah, Rod Serling would just be great material for Rod Serling, wouldn't it?
I don't know, maybe I'm in the wrong profession. I should just move a couple thousand miles to the west.
Well, look, you know what I appreciate is that you're laying it out there what you think. You're not intimidated by, not saying what, a lot of people want to hear. Okay,
Yeah, no,
you don't do that.
it's a bad habit. It's cost me a job a few times, but it's
Yeah.
more than enough. It's paid off more than enough in terms of making money otherwise.
RJP says you need deflation and lower growth for that sell-off. It's just not there yet.
Nah, the inflation and growth is the results. It's not the cause. Inflation is never a causative agent. If it goes to hyperinflation, like
Yeah, Weimar Republic.
yeah, okay. People take to the streets, and you have you have a terrible social disorder. But inflation that the United States has experienced is never a problem. As far
George
as that,
Robertson. George Robertson, everyone. Check him out. Check him out on Substack. All
yeah.
right.
And I'll continue to in the Substack. I'll
And
lay
you have
this.
a new handle. Is this your new handle? What about the
No,
Bicker and Brattle?
that's just what Substack assigns to you, so that I guess so that they can hang out like Twitter or X. No,
Yeah.
X. I'm still bickering Brattle.
Okay. All right. This is for Substack.
Yeah. So I'll keep
Okay.
laying it up the Substack, and I'll also keep giving out my misfortunes. I'd like to provide like a pretty good idea who I am and what I think and how I think, so that as I lose money or make money, hopefully it helps people out by qualifying the value of my content.
Beautiful, George. Skin in the game. Okay. Not just putting out advice and saying, pay me. Does
Yeah,
it himself. Yeah.
and the risk manager is working now, so
Yeah. You could
it's not.
probably squeeze a few more positions on when she's out.
Well,
Double up, bro. I'm kidding you.
I
Anyway,
never use
George.
full disclosure. Okay,
All right. Well, George, always learn from you and
yeah.
gain some insights and look at some things I didn't see before our conversation. So I want to thank you for coming here every quarter and
Well,
addressing us.
if Musk can seriously say that he wants to move to Mars, I can seriously talk about getting the crash. So there you go.
Okay. George Robertson, follow him on Twitter at Bicker and Brattle and check out his letter on Substack at the Monetary Frontier. So
Yeah,
George is like Daniel Boone in the
yeah.
financial markets.
I go out of my way, Dale, to the Substack is I think it's I forget often. I think it's $10 a month. I go out of the way to make the cost immaterial. Hopefully, if you get involved with the Substack, it's either because you think it's just useless or you think it's pretty valuable, but the cost should not be an issue.
Well, that word frontier makes me think of Davy Crockett, King of the Wild Frontier.
And the story for all those guys, Daniel Boone, David Crockett, they were like
Yeah.
they were very Trumpian real estate scoundrels. That's why they all had to go down.
Yeah. And the Tennessee Vols. Anyway, George, great talking to you, buddy. Good
Great
luck.
compliment, great compliment to be on here always, Dale.
All right, buddy. It's great to have you in the rotation. I hope by the next time we talk, something has happened to put some pluses in your column on
Well,
the trade.
it was pretty happening pretty regularly for the first couple, since, well, actually for quite a while. So,
Well, here's something I teach and I do with options. When I
Pardon?
have a double, this is what I do when I have option positions. When I
Mhm.
have a double, I'll sell half and then I have a free trade with the
I
remainder.
that probably makes sense. I also have a very good friend who always said that options are for people who plan to be wrong. So there you go.
Well, I have an even more cynical one.
Yeah.
Options are like relationships. 90% of them expire worthless.
All
How do you like that one, man?
right, Dale.
All right. You're in the 10% though, George. How about that?
All
Anyway,
right.
all
I
right,
hope
have
so.
a good luck, bro. I'll get a hold of you. We'll set something up for December because
Okay, we'll
I
do.
want to have you
Okay.
around Christmas time.
At the
So,
very least, I'll be interesting, I hope.
all right, no doubt.
Okay,
So
talk to you.
that's a wrap, everyone. Don't just count your pips, count your blessings, and really have a great day. If you miss stuff, that's okay. I miss trades every day. There's always another. And we'll see you tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.